Welcome to another stage analysis video. It's Sunday the 26th of May 2024. I'm going to start off today by having a look through some of the US watchlist stocks from the weekend watchlist post. But quickly before I get started, I just want to add a note for the members, as over the weekend I've added the NASDAQ composite stocks, so you can now filter by that into the US stock screener, and currently as I'm recording this video also adding the NYSE composite, so should take us up to well over 5,000 stocks in total, and we've then got all of the major US indexes then listed in the stage analysis screener, so you'll be able to look for those, and any stocks that are then missing from the searches I'm going to start adding in manually as they come up. So I'll add a feature so that people can request stocks as well. So I'll get back to that in a bit, a little bit further on in the video. But getting back to the US watchlist stocks, I'm going to start off today with a look at eBay here. So we go to the daily chart first. You can see had the stage 2 breakout back here late in end of February, early March there. What's the date on that? So 28th of February, had that earnings move, gapping up into early stage 2, had a good initial run, and then the pullback was fairly shallow back to the 50-day moving average, shook out a little bit of a little double bottom, and is now making a new stage 2 continuation attempt. So this is the first continuation attempt that it's made since the stage 2 breakout. So you can see that the stage 2 breakout happened just before, as it was coming into the Mansell relative strength started to cross over just after that happened, and since then the relative strength has held above the Mansell relative strength zero line, which is the 52 week, or in this case on a daily chart, the 252 day moving average. So if we go back to the weekly chart from the stage analysis website here, which you can find either by searching for the stock individually or going through the stock screen or through the sub-industry spell curve, etc. We've got eBay here, so started to move into stage 1 all the way back here at the end of 2022. First change of behaviour, first break, so selling climax, automatic reaction, secondary test, started to form an initial structure here. As you can see with the initial structure, it was quite broad initially, and we had this first break into stage 2, which after only about 4 weeks or so failed, came back underneath the 30-week moving average. Your investor stop loss goes around this point here underneath the 30-week moving average, the breakout point. So failed as it came back into here again, had a second attempt around this point here in July, quickly failed, single week reversal back below the 30-week moving average, immediate knockout of that. So 2 failed early stage 2 breakout attempts here. Well, that one wasn't quite so early, it had been basing for a while, but you can see here with this broader structure, it's then made this new stage 2 breakout attempt once again later in early into 2024 here, with some strong relative volume coming through. And if we actually broaden out this, tighten up the range here, you've got the up thrusts, spring type action in the range here, and then this new stage 2 breakout attempt on this week here. So now as it makes its first continuation, you can see there's a bit of a change of behavior in terms of we had the stage 2 break, the pullback into the backup range, and then making that continuation. So higher lows, higher highs, is now trending higher in stage 2. The stage analysis technical attribute score has moved up to a maximum of a 10. So what that means is we've got 10 of the characteristics that we look for in the stage analysis method in the stage 2 stock. Relative strength is above the Mansfield zero line here, crossed over just before it broke, or just after. I said it in the daily, didn't I? So just on the week after, starting to cross over there. Another way you have a look at here, you can see the sector, the industry, and the sub-industry. These are the GICS data. So this is the percentage of stocks in each of these that are technically healthy. They have stocks on SATA 6 or above. So you can see if we click into the sub-industry here, that eBay currently is second in the broadline retail group. PDD is above it at the moment. Another way that you can look at this data is through if we go to the bell curve. So if we go, it was the broadline retail group here. So quickly let's search for that down here. So broadline, you can see the broadline retail group, and you can see the 1 week change, 2 week change, 4 week change, and 13-week change here. So it's actually dropped by minus 4.17% on the week, and what that means is that's a percentage of stocks in the group that are on a SATA 6 or above. So if we look at the group individually again, so you can see here, this is eBay. You can see for that we had this stock moved above a 6, this moved above a 6, so we've got two moving above, whereas we had this moved below a 6, this moved below a 6, and this one moved below a 6. So we actually had three that dropped below. So there was a slight variance in terms of change over there, but overall there was actually some strong movement in the group, and it's in a healthy mid-range position. Another way you can look at that with this is if we go to consumer discretionary here, you can see the broadline retail group in the 50% range here. You can click on the chart, you can get the individual stocks up here and see that. But you can see in terms of its actual overall sector, it's one of the strongest sub-industries in the sector. So this is all of the consumer discretionary group. And we can go back and see it in the broader context versus the market. So it's down here. This is where it is compared to the rest of the market. So majority of the market at the moment is in what we call the weak zone, with 40% or less of stocks in each sub-industry that are technically healthy, and only 19.28% are strong. So this is more in a neutral position here. So that's another way that you can look at that data. So another one. Next up is Crocs, so making a new stage 2 continuation attempt again in early stage 2. We had the stage 2 breakout back here following its earnings results, made a little bit of a cup and handle pattern breakout attempt at the moment. Not huge volume, but there was volume increase on the breakout there, and has trended higher since its recent earnings reaction here, and the pullback back to the 180R level has held fairly well so far. So as long as it doesn't immediately drop back into the range here, we're looking for it to trend higher in early stage 2 here. Again, let's get rid of bell curve. So you can see the weekly chart of this. So it's in the footwear group here at the top of the group currently. So this is your stage 2 breakout week back here. So you can see that on strong relative volume there, and now making that first continuation from this cup and handle pattern on the weekly, but not quite clear of overhead resistance yet from back in the high from 2023. But at the moment, trending higher above its mantle relative strength 0 line, and the SATA score has risen back up to a 10. So it was an 8, it's gone from a 6 to an 8 to an 8 to a 10. So technically been improving for the last 4 weeks there. Come back. Next up, we've got Coin. So this one broke out, made a stage 2 continuation back in November, pulled in a little bit of a cup and handle type move. Has been consolidating recently for the last few months in a sideways range, has dipped below the bottom of the range multiple times here, but starting to pull up towards the top end of the range again, back at its plus 180R level. It's looking for this to start to grind its way back out into the broader structure here. Again, if we go to, let's get rid of that chart there, get on the chart from the website. So original stage 2 breakout areas back through here, starting to move up and out more convincingly in the November period there. So it's been in stage 2 for a while now. Pullbacks, no significant change between these two pullbacks. This one's a little bit shallower than that, was a bit sharper there. So at the moment, starting to rebound from a SATA 4 to a SATA 6. So a 4 is 5 and 4 are neutral scores, and a 6 is the start of the strong range. So a way that you can scan for this in the screener, if we go to the screener quickly, is if you're looking for a stock that's been on a neutral score and then it's moving onto a strong score, so a 6 or above, you can go to this filter here, so the SATA crossover. So we can either look for change into strong, so that'll be anything that's less than a 6 move into a 6 or above, or you can use any of these here. We are going to have custom ones where you can combine all of these together. So if we just look for a change into strong, so you can see we've got 169 results. You might want to filter that down some more, get rid of some average volume, get rid of the market cap, etc. And then we should be able to, we're down to 50 results now. So you can see Coin is in that result there. So moving up +2 this week from a 4 to a 6. So you can obviously drop that down into individual sectors and industry groups and sub-industries as well. You only want to look at tech stocks, for example. There was only 13 this week that moved from into the strong zone with these characteristics. So it's another way that you can look for that. So at the moment, rebounding back above that 10-week moving average, relative strength remains strong. So, and it's moved from a neutral to a positive technical attribute score here, with again a 50% score for the group. So diversified capital markets, a pretty small group